Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other global media, and founder of the world-acclaimed ethical sustainable investing information website Investing for the Soul. And please note my disclosure statement at the end of the podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to my podcast, Ethical and Sustainable Investing News to Profit By, for May 10th, 2019. Presented by Investing for the Soul. Investingforthesoul.com is your site for vital global ethical and sustainable investment resources. Now to this podcast. Again, for any terms that are unfamiliar to you, simply Google them. Also, you can find a full transcript, live links, and sometimes bonus material at my podcast page located at investingforthesoul.com/podcasts. Many of you listening are interested in ESG and SRI bond and fixed income investments, and with good reason. A recent article titled Largest 10 Socially Responsible Fixed Income ETFs by Todd Schreiber of ETF Trends reviews two leading funds in this space. They are the iShares Global Green Bond ETF on Nasdaq GM, ticker symbol BGRN, and Van Eck Vector's Green Bond ETF on the NYSE Arca Exchange, ticker GRNB. These bond funds have great pedigrees. However, the article's title might suggest the review is of 10 SRI fixed income ETFs, and that's a little misleading. Concerning the 10 listed, but not reviewed, I wouldn't put them in the same category as the two funds examined in the article. The SRI credentials of the 10 listed are mainly that they invest in government securities and blue-chip company bonds. Of course, governments fund all sorts of things that ethical and sustainable investors might argue aren't socially responsible. And even though blue-chip companies such as Apple are frequently top SRI holdings, the bonds aren't usually going directly to fund green projects. Whereas the iShares Global Green Bond ETF and Van Eck Vector's Green Bond ETF specifically fund projects and activities related to environmental and social concerns. Well, I can't resist the temptation to not talk about the great Beyond Meat initial public offering. It came out at $25 a share on May 2nd and has traded over $80 since then. For a good review of what the company is and what it faces regarding competition, etc., see this MarketWatch post titled Beyond Meat Goes Public with a Bang, 5 Things to Know About the Plant-Based Meat Maker by Sian Linan. Quoting Sian, it's Sierra, she says, the maker of the Beyond Burger, which is sold at Whole Foods and restaurant chain TGIF, among others, priced its initial public offering at $25 a share, raising at least $240 million at a valuation slightly shy of $1.5 billion. Close quote. Now at $80 a share, Beyond Meat has a staggering market valuation of about $5 billion. I'm delighted to see this offering, as one of the most important things we can do to slow down carbon emissions and climate change is to reduce our consumption of meat. However, some climate researchers are skeptical about the net benefit of highly processed vegetarian and vegan offerings on the climate. That this IPO went so well is a testament to the fact that even many conservative financial types are recognizing there's money to be made in climate change. However, I suspect that most of the action and interest probably comes from younger investors. Furthermore, this could indicate the beginning of a thrilling era for new offerings that ethical and sustainable investors can get excited about. Obviously, the underwriters significantly underestimated demand for Beyond Meat's shares. When IPOs triple in price right after being launched, it means that the issuer, the company, could have gotten far more for their shares. Though Beyond Meat is probably happy, they're probably unhappy that they could have raised double or triple what they got. So Beyond Meat is an exciting short-term play, but with so many competitors to its products over the medium to long term, it's not obvious it will be a winner yet. For a good review of what Beyond Meat's success means for two burger chains offering vegan burgers, see this post titled Tim Nash's Sustainable Stock Showdown Battle of the Burger Chains by Corporate Knights in Canada. Admittedly, this review is of the Canadian market, but it has bearing on the US and other markets too. Of course, Americans or anyone can invest in the Canadian stocks of the burger chains mentioned in that post. After a great review, Mr. Nash finalizes his recommendations as follows, and I quote, A&W Food Services Canada, which has no corporate connection to A&W's American locations, is obviously a much smaller company than Restaurant Brands, but with a higher dividend and a lower beta, A&W provides a nice mix of income and growth potential. The chain is the clear winner. Close quote. Now, for ethical and sustainable investors interested in the animal friendliness of their investments, read this article by Meredith Jones of MarketWatch titled Opinion. Here's how to check the animal friendliness of your investments. Quoting her, she says, "It's easy to check which individual stocks are cruelty-free, but you can't yet invest in a vegan investment index." She offers several ways to checking which investments are free of animal-related products and testing. If you're interested in finding more organizations that can help you in this endeavor, check out my Investing for the Soul site's pages, Environmental Organizations and Resources, and, second page, Organizations Promoting Corporate, Ethical, Social, and Environmental Responsibility. Turning to a completely different aspect of investing, let's talk about separately managed accounts at financial institutions compared to owning a portfolio of ETFs. Now, separately managed accounts aren't for everyone, as they usually require sizable investment. However, if you meet the threshold, they could be better for US investors than ETFs, says Johnny Mayer at Think Advisor. Mr. Mayer says in an article titled ETF versus SMA, which is better for sustainable investing, that, and I quote, SMAs are ideal for values-based investing, as they allow investors to actively screen for certain product areas, e.g. oil, tobacco, or bad actors that they deem antithetical to their values. They also allow for more specificity, I'll get there in a minute, e.g. designating a certain percentage of revenue from carbon emissions to be included in one's portfolio. Furthermore, because SMA investors directly own the underlying securities, they can opt to play an active shareholder role, working to impact corporate behavior through voting proxies or shareholder resolutions." End quote. Of course, for those who might not have the means for an SMA, or even for those that do, check out my DIY Ethical Sustainable Investing page tutorial. There, in 1 hour, you can get a handle on how to easily and very cheaply put together your own personal values-based portfolio, profitable portfolio, no matter its size. In looking for companies, we all want to know about the ESG ratings. However, you might not be aware of which ESG rating firms are good. Well, in a new report, the various ESG rating services, go to this recent post in IR magazine headlined ESG Ratings, a look at the ESG ratings landscape. Register at the bottom of the page to download the PDF report. Ethical and sustainable investors are concerned with many issues, but one that they might not have thought of and which is still a global problem is modern slavery. Fiona Reynolds, head of the UN's Principles of Responsible Investment, says that there are a lot of ESG conversations around climate change, but it is interlinked with modern slavery, Reynolds told the Thomson Reuters Foundation in an interview. "We see many climate migrants and refugees who end up vulnerable and at risk of being trafficked," she added. Close quote. Another quote from the article states that the UN estimates that some 40 million people are trapped in modern slavery, from factory jobs to forced marriages. End quote. Perhaps it's something you might ask the companies you like who might have the potential for such involvement. The Reuters post is by Kieran Gilbert and titled "Look for the Laggards, Investors Told to Target Modern Slavery." Lastly, another good comparative analysis by Tim Nash at Corporate Knights for Ethical and Sustainable Investors has the title "Tim Nash's Sustainable Stock Showdown, Johnson & Johnson versus Unilever." Tim says that, and I quote, "With thousands of J&J cancer lawsuits pending, you might want to freshen up your portfolio with a cleaner company. J&J and Unilever are companies with very similar financial profiles, but, in my view, Unilever's brand is thriving while Johnson & Johnson's is deteriorating." Close quote. For decades, J&J has been a favorite investment for ethical investors, but not so much anymore, as Mr. Nash's post makes clear. Yet most ESG funds still have it in their holdings. Check your holdings and see. Perhaps you still like J&J for other reasons. However, at the very least, these lawsuits and the negative publicity surrounding them is proving costly to the firm's bottom line and stock price. So these are my top news stories for ethical and sustainable investors over the past 2 weeks. Again, to get all the links or to read the transcript of this podcast and sometimes get additional information too, please go to the investingforthesoul.com/podcasts and look for this edition. And remember, I'm here to help you grow your investment success and investing in opportunities that reflect your personal values. Please don't hesitate to contact me if you have any questions about the content of this podcast or anything else investment related. I can't say I'll have all the answers for you, and some answers I can't give due to licensing restrictions. But where I can help, I will. Now a big thank you for listening, and please click the share buttons to share this podcast with your friends and family. Come again. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link there for my do-it-yourself ethical sustainable investing pays tutorial. And don't forget to subscribe to my podcast using whatever app or site you get your podcasts from. Now, as I indicated earlier, I want to offer full disclosure. That means I'll mention in the show if I have any direct interest or holdings in companies or securities I'm talking about. Also, any favorable or unfavorable comments I make concerning companies or securities should not be considered investment recommendations. And furthermore, I cannot guarantee the accuracy or incur any responsibility or liability for any information herein. Please do contact me. I'd love to hear from you. I'm at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.